Could Liberation Day lead to a $1 trillion hit for the US economy? What happens to Canadian interest rates if the trade war drags on? And could lower interest rates in Canada actually boost the Canadian stock market? Those are this week's market moves. Let's dive in. All right, let's start with the trade war and the big focus on April 2nd, which U.S. President Donald Trump has described as Liberation Day, with plans for reciprocal tariffs around the world. Now, it could lead to an unprecedented situation. Tracking by the U.S. government and Bloomberg Economics suggests average U.S. tariff rates could reach levels that have not been seen in more than 100 years worth of data. Well, that could lead to as much as a 4% hit to GDP over a 2 to 3 year period, according to Bloomberg estimates. Just how big would that be? Potentially more than $1 trillion. Now, as for how the Bank of Canada might handle that, Desjardins head of macro strategy Royce Mendez believes the bank could pause on interest rate moves until we get a better sense of what the economic damage looks like. But Mendez would not be surprised to see rates come down by another 100 basis points this year. That would put them at 1.75% because he says there's other factors Canada has to contend with, such as a wave of mortgage renewals and slowing population growth. Now, if interest rates do continue to come down in Canada, that could actually boost Canada's stock market. That's according to a new report from CIBC Capital Markets. Some of this has to do with comparative returns. CIBC notes that investor rates for short-term investment products known as GICs had spiked to 5% when interest rates were higher. But now that interest rates have come down, on average, the GIC investment rates are below the average dividend yield for stocks in Canada's stock market. And so CIBC believes some of the money in GICs could flow into stocks. It says that could bode well for equities in sectors like financials, utilities, and communications. All right, those are our market moves for this week. Thanks for watching. What market moves are you watching? Let us know in the comments down below. And don't forget to subscribe so you don't miss our next Market Moves episode. See you next week.